Hello, investors, and welcome to another edition of 18 Minutes with 180 Markets. Well, friends, cycles. There are business cycles and especially commodity cycles. And within the commodity space, today we're going to discuss rare earths. And one of the biggest questions we get is this the bottom of the cycle? And the short answer is we don't know. But what we do know is that there is a structural supply-demand deficit, and especially coming from tier one jurisdictions. And that's why today we are so thrilled to be joined by Arafura Rare Earth, because this is a company that not only has a big tier one project, but also is well on its path to financing. And this is so, so important. And we're going to discuss all these today with its managing director, Darryl Cuzzubbo. And Darryl, with that introduction, welcome.
Thank you, Greg. Great to be here.
Great. Hey, Darryl, businesses, you need the right project, but you also need the right people. You're relatively new to the business, but you bring a skill set that is a necessity right now for Arafura in its life cycle. Can you just talk to us a little bit about your background and again, especially about those skills?
Yeah, sure, Greg. I think you've gone to the crux of the opportunity that we have here. So the project we're building is a very complex integrated plant, and that requires specialist skills. I joined the Arafura board about 3 years ago because I bring those operational and project skills for a complex plant, and I've been in the managing director role since February. But some of the background that's really helped me, I think, is I ran Olympic Dam for a number of years. And again, that's a very complex integrated plant. I ran the manufacturing sites globally for all of Orica. And again, it comes down to how do you manage these complex integrated plants in a stable way, maximum utilization, maximum recovery. And that's going to be absolutely critical for us and the team that we build to build and then operate our Nolans project.
Right. And speaking of Nolans, the Nolans Rare Earth Project, a big, large-scale project in the Northern Territory, Tier 1 jurisdiction. For people that are unaware, but you probably are aware by now, supply and demand, or demand coming out, or supply, I should say, excuse me, coming out of China has a lot of potential restrictions around it, but not in Australia. Nolans, can you just speak to the project a little bit?
Yeah, sure. So the Nolans project phase one will produce about 4,400 tons of neodymium and praseodymium. And I'm going to refer to those two rare earths as NdPr. And they're the most commercial, if you like, of the rare earths. And you need these rare earths to make very strong permanent magnets that you use in your phones, your speakers. But most importantly, demand is expected to double over the next 10 years because of electric vehicles and wind turbines. So Nolans will produce about 4,400 tonnes in phase one. Phase two is expected to increase that by another 100 to 150%. We will also produce 144,000 tonnes of high-grade phosphoric acid. And the reason why that's important is because that's an important byproduct, and that pushes us right down to the bottom of the cost curve and below the cost position of the Chinese that currently dominate nearly 90% of the global market.
Right. And so we're going to discuss that in a little bit more detail. Where
Mhm.
are you? You are in the lower cost quartile, which again is so important. It gives you so much margin of safety there. Can you just discuss it, put some numbers around that, please?
Yeah, so our unit cost, US dollars per kilo, is about just under $30. And you can see the NdPr price today is about $56.
Right.
And we're currently sitting at multi-year lows. So even at multi-year lows, we're still making a healthy cash margin. At today's prices, which kind of goes to your point around have we hit the bottom of the cycle? Like you said, we never know. But what we do know is that even the Chinese have been losing money at the current pricing. So that's clearly unsustainable. The other thing I'd point out is forecasters believe that the inducement pricing to bring on additional production to meet the doubling demand is about 3 times the current pricing. So we think there's a significant upside.
Right. And is there, Darryl, I'm not sure if you truly know the answer to this. Would
Mhm.
you see supply being cut off potentially coming out of China right now due to the current prices?
So I don't. What I do see is that you look at the US are putting in place tariffs that
Right.
kick in 2026. The European Union with their Critical Raw Materials Act that says that no more than 65% of supply can come from one country. As those take effect, uh, that is going to create, a China supply chain and the rest of the world supply chain and very different pricing dynamics. And we can see that start to take place probably from around 2026 when these tariffs kick in.
Right. And before we get to 2026, we're going to get to 2025 in about a month's time from right now. And for Arafura, this is a really exciting and big year. Maybe just talk about 2025 because this is the time.
Yeah, so maybe so let me just talk a little bit about so it's all about the funding. We've done
Yes.
the engineering, we've got the team, we've got the board, we've got the approvals. It's all about funding. And our funding strategy has been very simple. It has been to secure binding offtake agreements with tier ones, such as Hyundai, Siemens Gamesa, off the back, secure debt, and we've secured over $1 billion worth of debt from 9 lenders across 5 countries. And that debt is either direct from ECAs or ECA covered, and it has quite a significant amount of completion support in that debt. So we can tap into if we have any challenges on our capital or schedule. We're now in the final step of raising the equity, just
Right.
under $300 million of equity. We want to secure 50 to 60% of that equity with cornerstone investors before we go to the general market. And at the moment, that's where we're at, is securing those cornerstone investors. So we're hoping to have that done and move into construction as soon as we've secured that equity in the first half of next year.
Right. So certainly very, very exciting time. And have bankers been appointed already to lead the equity component?
Yes, that's right. So we have 3 joint lead managers, UBS, Canaccord, and Barrenjoey.
Right. Excellent. And I
That
assume
gives us
it's
access to the global capital.
that's what I was going to drive at, right? There's no stone unturned, so to speak. And
Mhm.
also, obviously, a lot of people would be very strategically interested. And I assume, would there be also a lot of interest coming out of North America?
There is. So I would say, so obviously a lot of the interest is in Australia, but the second biggest source of funds, I think, for our project will be the US, but we're also tapping into, obviously, Canada and Europe and parts of Asia as
Right,
well. So parties that can see the structural deficit hitting, and parties that want to be part of the energy transition thematic.
right. Now, Darryl, assuming financing takes place in first half of calendar 2025, take us through the path of five construction.
Yeah, so the construction period is about 3 years, and we've allowed for a 2-year ramp up. Our lenders in the lenders model have had some conservatism, assuming a 3-year ramp up, but our base case is 2 years. Um, there is 4 main aspects. There is the mine, but the mine only represents 10% of the capital. So this is really a process plan. We
Right,
then have a beneficiation plant that produces a concentrate. We then have a hydromet plant that takes a concentrate to a carbonate. And then we have a separation plant that takes the carbonate to an oxide. The reason why this is so important is you have to get to an oxide level of processing, which represents 95% of the value chain of getting to an NdPr metal. You have to do that in order to bypass China's supply chain. So
right,
you look at a lot of rare earth projects, in fact, the vast majority only go to a concentrate or a carbonate. So they're still dependent on processing capability that exists in China. This is an important point because it differentiates us from the other rare earth projects. So we've been able to secure binding offtake agreements from tier ones because they want to diversify their supply chain away from one country.
Right. And
Mhm.
Darryl, just to really get into it for a second, you've worked in a sector before as far as these complicated processes.
Mhm.
Can you just give us some tidbits about how you're going to go to, is it on a step-by-step basis, and especially how do you get the right people in place?
Yeah, so that's a very, very good question. So I'm going to say the sort of people that we will be tapping into, the sort of skills that we need, is more from the manufacturing and the oil and gas sector as
Interesting.
opposed to the mining sector. So just to talk about it a little bit simplistically, in mining, it's largely to do with optionality. So if something goes wrong, I go and do this.
Right.
Whereas when you've got a complex integrated plan, whether it's an ammonium nitrate plant, whether it's, I worked at the Port Douglas
Orca.
Complex
Yeah.
as well, or at Olympic Dam, it's all about process control. The whole plant needs to run in an integrated, stable fashion where you keep the process in control. So that requires a very different type of skill set and mindset, but also requires the best maintenance strategies. You can't have a stable plant unless you have a reliable plant. But thirdly, you need a different level of operating technologies to run that plant in an integrated and controlled fashion.
Right. Hey, that's amazing. Now, Arafura as an investment, it's not necessarily a quote unquote day or week trade because there is a big, big target here. When we look at your current market cap, and I know that we can't talk necessarily about valuations, but
Mm,
compared to what the NPV of the project could be, what
mm.
can you just put some metrics around it?
Yeah, so our market cap at the moment, it's varying a little bit, but it's around 350 million Aussie dollars. The NPV is 1.7 billion US dollars. Um, as I mentioned before, in US dollars, we secured about $1 billion worth of debt, but that includes 280 million dollars of completion support. So if we need to tap into additional capital, um, beyond our capital estimate, we've got 280 US
Yeah.
million dollars to tap into, and then that leaves about 800 US million dollars, or just under, to raise in equity. We want to raise conservatively about 60% of that with cornerstone investors, and once we've secured that, we then go to the broader market.
Right. And for you property developers out there, you know how important is always to build a reserve into your project estimates because things can go wrong.
That's right. That's right. We've actually got a fair bit of conservatism. So the lenders have made some conservative assumptions around ramp up and contingency. We've then got the 280 US million dollars of additional debt, but then we've also got, as part of the 800 US million, an additional 80, includes 80 US million dollars of equity cost overrun facility. So we've actually got three layers of
Yeah.
contingency. And whilst that makes the funding ask a little bit tougher, what it does do, Greg, is investors know that this thing is going to be completed.
Right. You're fully funded, and that is so, so important because the last thing you want to do is to get to, let's just say, the third period and just run out of money.
Exactly. Yeah. So
You want
we've
to get
got
to the finish line.
we've got three levels of contingency to make sure that doesn't happen.
Right. Hey, Darryl, we have to keep these short, but in conclusion, the way that we see it here right now, you have the right people, the right project, financing well underway, in a potentially depressed market cycle right now, which could come online could start ramping at the perfect time. Any final words for the audience?
Yeah, look, so you just touched on the reason we want to hurry up and get this project into construction is we think that it's going to be a very different pricing environment in 3 years' time. We want to make the most of that, and out of that cash flow, move on to phase two. Phase two not only more than doubles production, but it allows us to become a processing hub, which allows us to have a growth vector that goes beyond our ore body.
Right.
Uh, And yeah, so we think, the market's kind of tough at the moment, but now is the exact right time to get the project into construction so that when you are moving into operations, you're entering in a very different pricing environment. The other point I would make is if you look at a lot of people compare us to lithium and nickel,
Right.
and there's some similarities and differences, right?
No.
So sure, the EV sector is a big driver of rare earths as it is lithium and nickel, but the biggest difference is the supply response. If you look at the rare earth sector,
Yes.
the development pipeline is bare. So it's hard to see too many projects getting up in the next five and going into operations in the next 5 to 10 years. And those projects today, as I mentioned earlier, only go to a midstream processing. So they're
Right.
still reliant on processing capability that today only exists in China. So we think right time, right place, right strategy, and we have the right people to pull it off.
Right. Darryl, thank you so much. We definitely looking forward to seeing the story unfold.
Thank you very much, Greg.
Bye bye.
See you. Bye bye.